gold, silver miners will most likely get hit, which is fine because it's going to reset the pricing. And after that is like the last time to like get on the next train for a massive move where gold will, who knows how high it'll go, silver 80, 120. I mean, I think there's going to be some huge upside potential. But right now we just had this multi-year consolidation where stocks and real estate took off. Now we've got this rally in gold. The whole world is getting nervous about everything. We had the same thing happen over here in 2007, 2006. We had a multi-year pause. Every asset class took off but gold. And then suddenly gold came out of nowhere because everybody got nervous of all that bubbles. And then gold had that pullback. And so now we're just waiting for another one of these pullbacks. While it'll be downward for stocks and miners, it is also going to be a huge opportunity and to re-enter or accumulate even more once we see those kind of levels reached.
ChrisVermeulen, founder of the Technical Traders, is projecting a compelling narrative for silver and gold markets, drawing parallels with historical market cycles and anticipating a substantial price surge in the coming years. Vermeulen believes the current market conditions are setting the stage for a significant rally, with silver potentially reaching as high as $80 or even $120 after an anticipated market reset. Current market analyst projections align closely with Vermeulen's optimistic outlook. Experts forecast silver prices climbing to $40 by the end of 2024, gradually increasing to $50 by mid-2024-25, and potentially reaching $80 by 2028, with a long-term target of $100 by 2028-2030. Vermeulen's analysis draws striking similarities to the 2007 and 2008 financial crisis, characterized by dramatic market volatility. During that time, gold prices plummeted to $692.50 per ounce, representing a one-third decline from their peak, while silver experienced an even more pronounced drop from $19.24 to $9.09 per ounce. However, both metals demonstrated remarkable resilience, rebounding strongly in the post-recession recovery. The market strategist emphasizes the importance of Fibonacci retracement levels and views current pullbacks as part of a natural market cycle. His strategy identifies these pullbacks as potential buying opportunities, particularly in gold and silver markets. The recent post-FOMC market activity provides a compelling example, with a temporary retreat forming a bull flag formation, a classic pattern suggesting potential upside after consolidation. He also draws parallels to the 2006 and 2007 period, where all asset classes performed well except gold, which then surged after a pullback. Vermeulen expects another pullback soon, and while it may bring downward pressure on stocks and miners, he sees it as a significant opportunity to re-enter or accumulate more at favorable levels. Before watching this video, please subscribe to our channel, hit the bell icon for notifications, and share it with others.
A pullback in gold is an opportunity because I believe long-term we're going a whole lot further, higher to the upside. But if we were to just kind of look at a retracement, so this is Fibonacci retracement saying it based on this huge run up. We had the first run, we had a bull flag in the second half. There was another one that came from 2001 to this high and low. It comes at the same level. This is why gold's getting rejected right now. This is just two massive chart patterns colliding with the same target. And now some event is happening. We have an election, and I think the economy is slowly starting to stall out here, but gold's pulling back. And so if we look at this Fibonacci retracement, this is telling us, this is the sweet spot for where usually something wants to pull back to. This is potentially 2133 to about 1925. That is kind of based on this larger cycle. That is the pullback that could happen. That's kind of the more severe pullback. We can also look at the most recent rally and take a look at this smaller window of where that next box would be, and that is somewhere in this range right here, which is about 2350 down to about 2200. So those are the two boxes where we need to be aware that gold could pull down to. Now keep in mind, this is the monthly chart. So overall, it could pull down here, and I believe gold will be more or less weak and out of favor till probably like late next year. So I would expect these bars to kind of drift down and put in a bottom or base, chop around. And then once I think the economy has a cleansing event and something triggers, I think gold, silver, and miners will be off to the races. And that this pullback that will come down into this space is going to be the same as this pullback that we had right after the last financial crisis, and gold took off for several years. And miners, this was like the ultimate opportunity for anyone in the mining space to get into miners. And so that's what I've been drooling about, waiting for a financial reset. Gold, silver, miners will most likely get hit, which is fine because it's going to reset the pricing. And after that is like the last time to like, get on the next train for a massive move where gold will, who knows how high it'll go, silver 80, 120. I mean, I think there's going to be some huge upside potential. But right now we just had this multi-year consolidation where stocks and real estate took off. But now we've got this rally in gold. The whole world is getting nervous about everything. We had the same thing happen over here in 2007, 2006. We had a multi-year pause. Every asset class took off but gold. And then suddenly gold came out of nowhere because everybody got nervous of all the bubbles. And then gold had that pullback. And so now we're just waiting for another one of these pullbacks. And while it'll be downward for stocks and miners, it is also going to be a huge opportunity and to re-enter or accumulate even more once we see those kind of levels reached. Take a quick look here at the seasonality chart for the SP 500. Here we are, coming in November here, middle of November. This is usually we're going to see a push up in equities. Trump is in, it's favorable for equities, so we definitely have a tailwind to push the markets higher. Seasonality wise, gold should also be going higher. Right now, I think we're just seeing money rotate out of gold and into equities and Bitcoin because gold has really hit that upper target that you and I had talked about like a year ago or so. And so money's just kind of rotating out of it. And when we look at the overall cycles for the market, this is major economic cycles, which I touched on at the very beginning as you and I were talking, these huge cycles at play that the governments, I don't think, can actually stop. In precious metals, gold tends to do very, very well. And so as you were saying, I do think gold and miners are oversold. I think they're ready for a bounce and a rally. And this is a time that even if the stock market keeps going up, precious metals should rebound and recover and maybe go back up to the recent highs that the miners have had and gold has had, because this is just a favorable time for them because there's uncertainty everywhere with currencies and the stock market bubble and housing and all kinds of stuff going on, right? So there's a lot of things at play, which I think is eventually going to send the dollar higher as well.
Vermeulen observes that gold miners form a stage 3 topping pattern, indicating potential market shifts. With improving fundamentals, strong bullion prices, and falling oil costs, the sector is poised for recovery, potentially driving the gold bull market and attracting investor interest. Barrick Gold, one of the industry's leading players, exemplifies the sector's potential upside. Current analysis from Wall Street paints an optimistic picture, with 12 analysts setting a consensus 12-month price target of $24.52, representing a substantial 47.53% increase from its current trading price of $16.62. The range of forecasts, from $22 to $28, reflects a broadly positive outlook despite varying degrees of optimism among analysts. However, Vermeulen's analysis also includes essential caveats for investors. He particularly warns about potential market corrections that could materialize in late January and broader market challenges that might trigger a sector-wide sell-off. These factors could lead to a reset in market valuations, highlighting the importance of careful timing and risk management in investment decisions. As the sector navigates through this critical phase, investors must maintain a balanced perspective, weighing the significant upside potential against the sector's characteristic volatility. The gold mining sector's trajectory through 2025 appears to be at a crucial juncture.
If we look at the big picture of the dollar, it is more or less a series of higher lows, a series of higher highs. It stair steps its way up. I believe we're going to go back into the 120s, potentially way up, even higher. I believe we're in a very similar setup as we were back in 2000, 2001, in terms of, I think we're going to see fear in the market. We're going to see the market sell off. Who knows what Trump is going to do with their whole reorg and Elon kind of shaking things up in the government and trying to get rid of a bunch of different groups, I think, that are in there. And usually we see the market rally. During bear markets, we see the dollar rally. 2008, huge rally in the dollar percentage-wise. I think we're going to see the same thing again. And so that's where we're at. Like the dollar is now at a short-term resistance area. And if it breaks out, a big move up is going to put pressure on commodities. We'll probably see gold and silver struggle. It will be a pretty major headwind. The crazy part is gold's had a beautiful run over the last couple of months. So has the dollar. They've been running together. And so it's definitely interesting. But now I think the dollar is going to take the headwind or be a headwind for gold, because if gold breaks out here and starts to run even higher, it is starting the next major run up, potentially to like 120, which will definitely probably mute some of the upside in gold. Well, I mean, miners are pretty noisy. We could argue there's a major top, a stage three topping phase in this range. You could one here or kind of in this area. There was a kind of a major bottom basing phase down here, like a stage one, and we're still kind of building this really gnarly, volatile, this kind of base. And miners did run up. They hit some measured moves to the upside, and now they're getting sold off. They're definitely underperforming. They're nowhere near all-time highs, and a lot of damage is being done to the gold chart right now. And I did say gold miners are oversold, and I believe they are simply because they came down to support and then they broke it and they've moved the second half of that level. So now I believe they're down into an oversold territory, which is draw a line across here, which is not very straight, but it is a price support level. It's also a measured move. It's halfway. Whatever this move was, when it breaks, you get the same cycle move to the downside. And there's lots of volume, so people are panicking and they're dumping shares. They're giving up on it. So all those things come into play. And that other cycle chart I showed you, where precious metals are in favor, that means once the selling dissipates, I think we could see gold miners work themselves back up over the next couple of months into January. And the question is, I don't really know if it's going to break to new highs, but it might regain a good chunk of this. But then if we go into a market correction come late January and 2025 is a bad year for everything, I believe they're going to break down and sell off in a big way again and reset. So miners are still a trade. This is like, you have to trade it. I don't believe you really want to hold them through the next correction. I think you want to try to make some money here and then potentially, accumulate, get back into that space more so once there's been a reset, if that's the case. Now, we'll just have to see how they unfold. This is the nice thing about technical analysis, is that it doesn't really matter what I think or say here, because we're not trying to predict what price is going to do. What I do is I follow price. A trend changes direction, we change our position, we play that direction, or we just don't touch it if it's going in the wrong direction. So we just really let the markets unfold, do what they're going to do. And right now, I think the most bullish case for miners is like maybe a bit of a double top here over the next month and a half, 2 months, and kind of regain what they've recently lost.
The gold and silver markets are poised for significant movements as they navigate through a phase of volatility. While pullbacks may present temporary challenges, they also create opportunities for strategic entry points, especially as the broader economic environment shifts. As the dollar strengthens and market conditions evolve, gold and silver could face headwinds, but their long-term potential remains robust. What do you think about the future of gold and silver? Are they set for a big rally, or will they face more challenges in the future? Share your thoughts in the comments below. If you found this video insightful, don't forget to like, subscribe, and hit the bell icon for more updates. Thanks for tuning in.